Hello and welcome. My name is Jeffrey Kennedy and I'm the editor of Trader's Classroom and also Commodity Junctures. Today I want to share with you something very exciting, specifically a bar pattern. And the name of the bar pattern is a double close key reversal. I rely on this pattern a lot in my analysis of not only individual stocks, but also of commodities. And if you join me in a few minutes, I'll show you some great examples. Now, before I show you why I believe a double close key reversal is significant or so important, let me explain exactly what this bar pattern is. Well, it's essentially a 3-bar pattern. For example, you have a 1 price bar. We'll just call that a day for argument's sake. Then we have another price bar. That's another day. And then we have another price bar. Okay, so we have 3 price bars. Now, a double close key reversal forms or occurs whenever prices make a new low below the prior low, yet manage to close above the prior 2 closes. So, for example, the close on this day could actually be, say, the bottom of the bar, and then the same thing on the previous bar. So it's a 3-bar pattern in which you make a new low below the prior bar, yet the close is above the prior 2 closes. Okay, a great example of that occurred back in December 2018, as you can see right here. We have a price bar, and then we have another price bar, and this is the one that's important. Notice we make a new low below the prior bar's low, but manage to close above the prior 2 closes. This is a double close key reversal, and in this case, or this instance, it is a double close key reversal outside bar combination. The same thing occurred recently back in early May. It actually occurred on the very first trading day of the month, and as you can see, we made a new high above the prior bar's high, closed below the prior 2 closes. Hence, this is also too a double close key reversal outside bar combination. And as you can see, it sparked a very sizable decline that pretty much lasted the entire month of May. This is just a very simple example of how significant this one simple bar pattern can actually be. Okay, which brings me to my next slide. This is actually a price chart of Tesla. Now, on this price chart, I've actually included a few Elliott wave labelings of just short-term structure. The movement to the downside, certainly recently, certainly what we saw in May, is very indicative of third wave price action, so I've gone ahead and identified it as a wave 3 low. Okay, now prior to that, we also have some downs and ups, 1s and 2s. So I really believe that the recent move up we've seen in Tesla is that of a very small degree 4th wave move. Basically, this 4th wave move partners quite well with the prior wave 2. Also, we're following the rules and guidelines of the structure because there's no overlap between the extreme of wave 4 and the extreme of wave 1. This works, but if you look more closely at this price chart, notice what is occurring today. A double close key reversal outside bar combination. In fact, you can see it a little bit better if I spread the price chart out a little bit and utilize the daily price chart of Tesla. As you can see right here today, right there, we're making a new high above yesterday's high, but we're actually closing below the prior 2 closes, and also it's a double close key reversal outside bar. I'm sure from today's examples, you'll agree that the double close key reversal is indeed a significant bar pattern. Moreover, as we watch Tesla in the days ahead, we'll see how significant it really is.